Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
The U.S. says Israel has agreed to pause fighting in parts of the northern Gaza Strip for 4 hours a day. Ed Baxter is on that story and has the rest of the news from the 960 newsroom. Ed?
Yeah, Brian, this, of course, is an effort to allow people to flee and have the potential to get aid in as well. State Department spokesman Vedat Patel says some movement.
There will be 2 humanitarian corridors allowing people to flee the areas of hostilities in the northern part of Gaza.
It says it's a step in the right direction. Now, President Joe Biden says still seeing longer pauses for hostage releases, and NSC spokesman John Kirby says it's something Israel does need to do.
Israel has an obligation to fully comply with international law, and we believe these pauses are a step in the right direction, particularly to help ensure that civilians have an opportunity to reach safer areas away from the act of fighting.
Meanwhile, President Biden says aid for Israel and Ukraine is part of the bargain.
We ought to be able to combine Ukraine and Israel. We ought to be able, and I'm open to discussions on the border.
Now, later in the day, the president met with UAW President Shawn Fain and auto industry workers, pledging support in the EV market.
China is determined to dominate the electric vehicle market by using unfair trade practices. But I will not let them.
And the president then urged Congress to get together on finding a funding bill solution with a deadline approaching a week from Saturday. And along that line, Bloomberg sources are saying that newly minted Speaker Mike Johnson is having real problems doing that. Still, within his own party, finding a package. He reportedly planned to release a plan as early as today, but intense fighting, which to date he's not been able to resolve, has delayed it. And Senator Joe Manchin says, yeah, he's tired of all of it and will not run for Senate re-election. He says he will travel the country in an effort to unite Americans.
I know our country isn't as divided as Washington wants us to believe. We share common values of family, freedom, democracy, dignity, and a belief that together we can overcome any challenge. We need to take back America and not let this divisive hatred further pull us apart.
So the political question then is there a hidden storyline? Is he testing the waters to see if there's a possibility of a third ticket run for president? He'll be interested in a new Bloomberg Morning Consult poll out today regarding swing states. It shows Donald Trump carrying all but one of those swing states and overall 41% of the vote to Biden's 35%. Bloomberg's Michael Shepard says the real message here.
And they would rather see 2 other people heading the top of each party's ticket come next year.
And swing state voters also want to see the southern U.S. border. They say they want it given greater priority than foreign policies, including the Mideast and Ukraine. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. In San Francisco, I'm Ed Baxter. This is Bloomberg.
Chair Jay Powell says that the Federal Reserve is not fully confident that it has tightened monetary policy enough to return inflation to the 2% target. Here's Powell speaking at an IMF conference in Washington.
If it becomes appropriate to tighten policy further, we will not hesitate to do so. We will continue to move carefully, however, allowing us to address both the risk of being misled by a few good months of data and the risk of over-tightening.
U.S. stocks fell and Treasury yields rose after Powell's comments. Separately, Atlanta Fed President Raphael Bostic said that there's probably no need to tighten monetary policy more. So clearly a different sort of view. And his Richmond counterpart, Thomas Barkin, said it's too early to tell, though both agreed that the full impact from interest rate hikes has yet to be felt.
Well, earlier today, U.S. Treasury Secretary Janet Yellen and the Chinese Vice Premier He Lifeng kicked off their 2-day meeting. This marks the next step in a series of talks aimed at improving ties between the U.S. and China. Now, Yellen said the talks will include, or did include, or are including, discussions that the increased use of security measures really needs to be considered when you're talking about commercial relations. Here's Bloomberg's Enda Curran.
protection of IP, protection of technologies, areas of national security. All of these points, Ms. Yellen has proven to be just as hawkish as others on. But she's trying to weave this line that the two economies can also continue to do business together. China, of course, pushes back on this idea. They are, though, given the slowdown in China's economy, given the real estate bust, and given the kind of negative sentiment on foreign investment in China, there is a view that China is kind of back on the market for some investment again, and that's partly why they do want to try and stabilize relations with the US as well.
That is Bloomberg's Enda Kern. By the way, you could also say that the talks between Yellen and Lifeng are designed to help lay a little bit more of the groundwork for that expected meeting next week between Presidents Biden and Xi. The two will be in San Francisco for the Asia-Pacific Economic Cooperation Summit. And this is going to be the first time Biden and Xi have spoken with one another in person in nearly a year. Brian?
NVIDIA will release 3 new artificial intelligence chips for China. Bloomberg's Ann Cates has more.
According to state-affiliated news outlet China Star Market, NVIDIA developed the AI chips based on the design of its flagship H100 product, and Chinese firms are likely to take delivery over the next few days. NVIDIA took a hit after the Biden administration last month stepped up efforts to keep advanced chips out of China, the world's largest semiconductor market. Intel also plans to release a new AI chip for China. In Washington, Ann Cates, Bloomberg Radio.
We go to China next. The Industrial and Commercial Bank of China, this is ICBC. The bank was hit by a cyber attack, and the effects were felt far and wide. Here's Bloomberg's Rashad Salamat with more from Hong Kong.
The hack forced clients of what is the world's largest bank to reroute transactions. A large number of trades in U.S. treasuries were prevented from being cleared. It left brokers and traders scrambling to assess the extent of the impact of the cyber attack. There are reports of liquidity being affected, and speculation continues to mount that the issues were a catalyst for a very poor auction of 30-year bonds. Sources say ICBC alerted clients that trading was being impacted. This is a state-owned bank, which said that its U.S. subsidiary appears to also have been affected. ICBC is said to have hired cybersecurity firm Mandiant and has been offered assistance from the FBI. In Hong Kong, I'm Rashad Salamat, Bloomberg Radio.
So we are told the gang known as Lockbit is suspected to have orchestrated a ransomware attack against the U.S. unit of ICBC. This is the same group, by the way, that has just this past year hit companies like Boeing, Ion Trading in the UK, and the UK's Royal Mail. Brian?
In some other news, China's top chip maker, SMIC, has reported quarterly sales below analyst estimates. Bloomberg's Joanne Wong has more from Hong Kong.
SMIC saw revenue fall for the third straight quarter. That reflects slowing smartphone sales and global trading curbs. The Shanghai company reported a 15% fall in revenue to $1.62 billion versus estimates of $1.64 billion. Net income fell 80% to $94 million, barely half of estimates. The miss comes despite hopes that a new line of 5G smartphones from Huawei would help offset lost sales. Huawei itself recently showed signs of resuming growth, but those hopes were derailed somewhat after the U.S. expanded curbs on China's chip sector last month. SMIC sees better times ahead, with a return to growth in the December quarter, but that hinges on whether or not the U.S. implements further sanctions. In Hong Kong, I'm Joanne Wong, Bloomberg Radio.
In Japan, SoftBank Group's flagship Vision Fund reported a loss of $1.7 billion. That's through the end of September. The company was hurt by a drop in valuations at WeWork and some other portfolio companies. And that comes on top of losses in the foreign exchange. All of that could hurt SoftBank CEO Masayoshi Son's pursuit of some new startup deals. Son has made a series of bets this year on autonomous technologies, particularly in transportation and logistics. Brian?
Doug, thanks very much. This is Bloomberg Daybreak Asia, 11 minutes past the hour. I'm Brian Curtis, along with Vonnie Quinn. Many thanks to Doug. Joining us now on the air is Michael McKee, Bloomberg International Economics and Policy correspondent. So first, a poor 30-year bond auction with a big impact on the market, and then Powell tilting a little more hawkish, Mike. It's said that Powell's words were actually more or less the same as the scripted words that he had back on November 1st, but that he was a little less hawkish in the news conference with folks like you and others popping questions to him. In any case, the Fed is on pause at the moment. What would it take for them to go off pause?
Well, we have asked that question a number of times, and we don't get a good answer. Probably what it would take is a sustained rise in inflation, and by that I mean the CPI or PCE rising for several months in a row, and the Fed getting the impression that inflation is no longer heading down. I mean, they expect it to be bumpy, so they think maybe a month here, a month there, you might see a jump higher. But if it continues to go higher, then they will have more work to do. They'll also keep an eye on inflation expectations, both in the markets and on the consumer side, to make sure that those don't start to come unmoored. At this point, there's no sign that this is going to happen, but they don't want the markets anticipating that that they are done yet, even if they are done.
And we get November preliminary University of Michigan tomorrow morning, or in the Friday session. Michael, he did downplay inflation expectations at the last meeting a little bit, almost rebuffing the idea that had been permeating from a previous meeting that UMich was quite important. Should we read anything into that? I mean, if we saw a bump tomorrow, for example, or in the Friday session, would that make a difference?
It's not going to make a difference. The numbers go up and down a little bit, and they went up significantly in the last month. And it is sort of incongruous that the rise didn't elicit the same kind of movement that it did a year ago, when he said that one of the reasons the Fed was moving was because of the Michigan survey. But the biggest issue right now, Bonnie, is that we're essentially almost 6 weeks away from the next Fed meeting, and there'll be several Michigan surveys. There'll be several CPI reports and PCE reports, another jobs report, a lot of data yet to come before they have to make a decision. So any individual data point right now isn't going to make a huge amount of difference to the Fed. Might make a difference in day-to-day trading in the markets, but not at the Fed.
Let me ask you about the 30-year bond auction. We understand that the reaction was poor, and the buyers weren't there to the extent that some thought they would be, and so yields shot up. But then we heard about the ICBC hack, and I'm just wondering, did that change things at all? Because it doesn't seem like it did. It seemed like rates went up and stayed up, even once you knew that there was a hack, and that may have affected things.
Yeah, it's not clear to what extent, if any, the hack of ICBC made a difference in the auction. Most bond professionals are looking at that auction and saying it was a disappointment, but it wasn't necessarily a surprise, because the Fed the Treasury rather, is coming to market with an awful lot of paper. This is the third coupon auction this week, following a whole bunch of bill auctions. And someone has to buy all that since the Fed's no longer buying it, and there just isn't as much interest. The U.S., being the world's deepest, most liquid, safest bond market, is always going to sell its paper. It's just going to be a question of at what price. And today we saw that come true. The people who generally buy 30 years, pension funds and insurance companies, they didn't want to pay the price that was being asked. And so there had to be concessions on the price, and we saw yields rise.
Yeah, Michael, how is the Fed judging financial conditions right now? I mean, in some cases, or at least yesterday, they were looser than they had been, and they had gotten pretty tight, but we're seeing yields bounce around like yo-yos.
Yeah.
Yeah, the Fed is kind of looking past that right now, because it recognizes the volatility in the markets and how the market's being buffeted by a lot of things at the moment. If you go on your Bloomberg terminal and you look at one of the financial condition indexes, and there's many of those, or even just look at, say, the 10-year yield, and you're looking at the last 3 months, it looks like we've retraced a lot. But if you go back full year, we're still significantly tighter, and rates are still significantly higher than they were, say, June, May. So at this point, it's a bit of a retracement, but it is not a complete retracement. And so the Fed is not too worried about it, as long as the trade's clear. Yeah. And we have that issue with ICBC today. But other than that, as long as the trade is clear, the Fed is happy.
The reason I asked you the first question was because you're so rational and you're always right, and it's the data that matters, not what Powell really says. And I wonder why does Powell feel? I mean, the bond market's a multi-trillion-dollar beast, and it's reacting to the data. And if it's dropping yields, then it's dropping yields. Why does he feel he has to come out and tell the market what it should do?
Well, I'm glad you think I'm always right, and I hope you'll pass that along to our bosses.
Yeah, they know.
At this point, the Fed doesn't want the market to get too far out ahead, because then sometimes perceptions can become realities. And if the market goes too far with yields, then the Fed might be stuck.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.